Welcome back to today's Trading Game Plan meeting. My name is Pete Renzulli, Trading Education Blogs. As usual, I'm going to start out with looking at the market. Two very interesting things, but more importantly, one important question that I got in an email yesterday, which obviously came from a swing trader, somebody who's on a little bit longer time frame, and said doesn't understand why so many active day traders are complaining about the type of market that we're in. So you can see clearly here we're starting out with the weekly chart. Obviously a screaming uptrend since end of 2012. Technically, we have a really clean long-term ascending wedge here, which should break out to the upside. Technically, the whole word is should there. It sets up price action. And even if we go down to the daily charts, we can still see how clean the chart is. All right. Clearly not any reason to be short other than the fact that you're getting frustrated on the long side for lack of follow-through. Basically, since November, we're pretty much in a $10 range in the spiders, so maybe 12. But this is what's frustrating to active day traders. And let's just take the last 2 days. Let's take Friday's price action and let's take yesterday's price action. Number one is we started out on the daily and we can clearly see the right trade is to be long. So I want to get this across very, very clearly. Great traders do not flip-flop back and forth. They only trade one side when they have a bias, and they trade it aggressively. So in this case, the better trades in the market are long. I'm not talking about individual stock picking. I'm talking about in the market are long. You're looking for spots to buy. So you end up getting a day like you had on Friday. And let's zoom down into what we had on Friday. So long-term picture, good. Gap down in a uptrend is a buy. So you would zoom out and start looking for a spot to get long here intraday. And you can see here we had the first what I would call a swing low, where we had a low, higher lows on each side. You would look to get long here. We did not follow through. Same signal here on the bottom. Did not follow through. Now this one was interesting here because we actually end up getting a reversal candle, a swing low, and then we get a bunch of indecision candles. So you had 1, 2, 3, 4, 5 indecision candles in a row, followed by a green one. And you would think that would be the spot. All right, fine, the selling is over, the buyer's going to come back in, and you get a little bit of a move up. You end up taking a small loss or a flat. Same type of bottom. Now you get a head and shoulders bottom on the intraday chart. You're like, fine. Now I'll hold on and I'll fill the gap and I'll make some money. We end up not following through. Looks like we're basing, and you would expect the 2 o'clock hour, which is when normal price activity starts to pick up again in the market. We end up bouncing back up, filling the gap, and these little small losses you took in the morning, nothing more than a normal part of doing business, and it doesn't happen. So what ends up happening is you get the opposite. You actually end up selling off into the close, and you probably took a little bit bigger loss than you would have liked to because of all this basing in the afternoon. Now, again, don't write me and say, oh, I'm a robot, I take my losses exactly where I'm supposed to. Yeah, okay, we all do. All right, but the reality is if you got chopped up in the morning, you're looking for a spot to make that money back, you have a finite window to make money as a day trader. You end up getting a little bit of capitulation here at the end of the day. I usually call this exhaustion, where you get a pretty decent move in one direction or the other. You spike away from the moving averages, get an increase in volume, and more often than not, that ends up being a reversal of that short-term momentum. So what's frustrating now on two levels is, number one, you end up getting the move overnight completely in the opposite direction of what you were hoping to get it on Friday afternoon. Again, you're looking long because it's the right trade. So unless you carried overnights, which was hard to do Friday afternoon into the weekend with a lot of earnings coming out, you end up getting the exact move you expected, filling the gap for the most part, maybe just a little bit shy. Now, let's say you didn't participate in this. Let's say you're a pure day trader and you came in, you got one trade here. You can see we had a nice swing low here. You push higher and you get one move roughly for about 75 cents in the SPY. You're great. We're setting up now. We're getting ready to take off for the rest of the day. I'm still looking for longs. Got one good trade after getting chopped up over here. Well, the reality is you look for a long here, doesn't follow through, you probably take a loss. Look for a long here, it doesn't follow through, you probably take a loss. Look for a long here, you got two moving averages converging, 20 exponential and a 50 period simple on the this is a 5-minute chart. You end up getting long here again, does not follow through. Does not follow. You get one follow through. That's what's frustrating day traders right now. So what's important to understand, if you're not intraday trading, or quite frankly, whatever time frame you're trading, you need to be aggressive in your strategic decisions of whether or not you want to be long or short, which means you need a trading plan in the first place. If you end up losing money trading your strategy, which is the right trade here, even if you're losing money to be long, if you end up losing money, you must keep your sanity and not start to deviate from your plan and start to say, well, I'm not making money long, I've got to start making money short. It's not the right play. There are just certain situations in the market where you will end up being frustrated doing the right thing, and you have to keep your cool, keep your risk at moderate levels, keep your risk smaller until you start to get follow through. It's just the reality of trading. There's going to be opportunities where you do exactly what you're supposed to do and you don't make money. And I will end this portion of the video with very, very clear mentoring, coaching, whatever you would like to call it. Excuse me. You will know you believe in your strategy when you are following it to the letter, when you're losing money, when you are being disciplined in recognizing a bias, being disciplined in taking every entry signal, and you go 1 day, 2 days, maybe even 3 days where you don't make money, but you're doing exactly what you're supposed to. If you had a winning streak or a period of time where you were making good, consistent money with the strategy, and all of a sudden you're not making money, it doesn't mean the strategy doesn't work. And I've gone through this so many times in my own trading career where I make money, 20 days out of 22 in a row, and then you have, the market for whatever reason just doesn't follow through and you lose money 2 or 3 days in a row. It doesn't mean your strategy doesn't work anymore. It's the odds playing out over time. I can't stress that enough. If you learn that lesson, you will immediately move closer to being a better trader. And I hope my trading losses, my experience, my trading wins can help you really understand that. It's something that most traders never have the opportunity to learn, and I really hope I can teach you that today.